blockchain and the new bond market. In recent years, a quiet movement has been gaining momentum behind the scenes of the global financial system. We're not talking about a trendy cryptocurrency or $1 million fund, but something that could redefine the $133 trillion debt market. The question is simple: is blockchain becoming the new bond market? And the answer could change the way governments, companies, and investors trade debt in the future. Let's understand why this comparison is at the center of the debate. The traditional bond market, whether public, corporate, or municipal, still operates with complex and expensive processes. To issue, trade, or settle a bond, it must go through a network of intermediaries, banks, custodians, and clearinghouses. This means high costs, settlements that take 2 to 3 days, and a lot of paperwork to reconcile information. In a market this size, every delay and every fee makes a difference. What blockchain changes? Blockchain technology introduces a transformative element: smart contracts. These self-executing contracts, recorded directly on the network, automate the entire life cycle of a bond, from issuance to interest payment and final redemption. This reduces the need for intermediaries, reduces errors, and can shorten settlement times from days to minutes, or even seconds, in delivery versus payment systems. Examples already exist. The World Bank, with the Bondi project in 2018, demonstrated that it was possible to issue and settle bonds using distributed ledger technology, more quickly and transparently. Imagine an entire market operating at this speed. Increased liquidity and access. Another crucial change concerns liquidity and access. Today, many bonds are rarely traded. Some municipal or corporate bonds change hands only once or twice a year, almost always in private and expensive transactions. On the blockchain, bonds can be issued in tokenized and fractionalized form, allowing investors to purchase small portions. This democratizes access, allowing even small investors to participate in transactions previously restricted to large institutions. One example is the Hong Kong Monetary Authority's Genesis project, which fractionalized green bonds to reduce the minimum investment amount. What's more, instead of a fixed-hour trading session, tokenized bonds can be traded 24/7 on blockchain-based platforms. Potential and challenges. All of this creates a scenario of greater transparency, lower costs, and greater speed. But it's not a revolution without obstacles. Blockchain infrastructure still needs to fully integrate into the traditional financial system, and implementation costs can be burdensome for smaller issuers. Despite this, the movement is clear. Global institutions, central banks, and regulators are testing and adopting the technology, aligning with what could become a new standard. Blockchain is not currently replacing the bond market, but it is creating an alternative model that is more agile, accessible, and has the potential to transform the way debt is issued and traded worldwide. We are possibly witnessing the beginning of a new chapter in the history of financial markets. What about you? Do you believe we will see a mass migration of the bond market to blockchain within this decade? Like and share this video and subscribe to follow more analyses on the future of global finance.